letting me. Test, 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 test. Testing 1, 2. Test. Test, test, test. Testing 1, 2. Test, test, test. Test. Test, test. Oh man, first time launching. It's been a while. All right, let's bring up. Looks like we're good. We got someone in here, Zimbo. What's up? Thanks for joining. I'm gonna just let everyone know we are live. So give me one moment here. Test. Can you hear me, Zimbo? Let me just message you. Let's see. Let's see. Messaged him or her. Let's let everyone know we are live. All right. Hey, can you guys hear me? Looks like I'm talking, hopefully. Just oh, you can? Felix. Really? You could hear me? Because we always have issues with this, huh? With the Discord? It's working? Fuck yeah, man. Finally. We are in business. You know what it might have been? I think it was something with the resolution or frame rate. I changed the frame rate. I put it a little lower, so maybe that's why. All right, man. Can you guys see my screen? Let's see if I could get the video going. There we go. Let's pop that on. Oh, it's going to be separate, so that works too. If it wants to do it. I don't know if it could go both. Let's see. I don't think it'd handle. I'm not going to push it too much, man. If you guys want to see my mug, I'm also streaming on YouTube, so I'll post that in the chat. Let me get the YouTube link real quick. YouTube link if you prefer. Boom. There we go. All right, we're live, man. Let me see if I could bring some of you. You know, I'll just give you guys access. You don't have to you don't have to talk, but if you guys want to just chat, man, let's chat it up. Let me do this. Let me bring you guys up. Where is that option? Is it right click or invite to speak? There you go. Oh, I'm not moving to YouTube, Felix. Let me see. I'm just streaming on both platforms. Whichever you prefer. I prefer. I'll be on both. Let's give a couple minutes here. Let's let everyone kind of trickle in. Say what's up. Oh, BT Fly, what's up, man? I hope you can hear me. Usually, this is the big test right here. If BT Fly can hear me, then we're in business, man. We are in business. BT Fly, can you hear me? All right, we got some people going to YouTube. So let me put my OBS and Discord on the same screen here. Where's the OBS? There it is. We should have some chats here. Feel free to ask questions in the chat, or I can invite you as a speaker on Discord. There you go. Let's see. Let's make sure it pops up on YouTube. That chat message. There it is. All right. I don't need a team. I could do this myself. All right. So let me move that like that. Let's move this way. Get the Discord there. Cool. I can hear but cannot speak. Oh, okay. Is it just you cannot speak by choice, BT Fly, or we just can't hear you? Is there an issue on our end? Or on my end? He is typing. You cannot hear me when I do. Oh. Yeah. Oh, wait. I might be on mute, man. Yes, I am. Hold on. Messed up here. I need to turn on the speaker. It's been a minute, man. I've been traveling, so I haven't been at the desktop in a while. Been months. It has been months. So let's see, sound settings. Here we go. Let me just do a sound test here. Let's play some fucking music. Oh yeah, here we go. This one. There we go. I need to move it over to the other one. Boom. All right, man. It was my bad. I was on a different speaker setting. That's some dope music, man. But I'll turn that off. I don't know if it's too loud, or some of you don't like that music. Okay, try now, BT Fly. Maybe I can hear you. If you want to try to speak. My speaker's good. Well, if you can't speak or don't want to, all good. You know, we'll chat it up here. Let's see. Who else is here? Or did people leave? The people that were in here left. They're like, man, screw this. I'm out. Oh, well, they're going to miss out. Let's see. I think Felix went to YouTube, so he's on YouTube. And Nima could streaming on both YouTube and Discord eat up your upload bandwidth. Oh, that's possible. Possible. Is it slow or choppy? Let me see. I'm going to check on my phone. Give me one moment. Yeah, it looks like we're good. It was, but now it's good. Okay. Ah. Yeah. It was probably because, yeah, I was... Yeah, my internet's been acting up today, too. Acting up today as well. But we'll roll with it. All right, cool. So, let's see here. Let's see, we got some messages. All good now. You're cutting out. Not sure if my end or yours. It's working on YouTube, it seems. YouTube seems to be good. I'll turn that off. Here. Okay. I got it streaming as well on my phone. So, I mean, it looks like, and the sound's coming through fine. So it looks like, yeah, it looks like maybe YouTube. I will stop, I'm streaming it on YouTube, But if you guys want to chat it up, I'll still have the Discord running. I just will turn off the screen share on Discord because no one's here right now anyways. So I turned that off. So maybe that'll help free up some bandwidth or some resources. And we're still streaming on YouTube, so we should be good. Let me just get that off the screen. Like that. We got the chart up. All right. So, man, like, yeah, it's been a while since I've done one of these. I've been out of the country for a couple months. Was traveling a bit and just enjoying life, you know. So, you know, I timed it perfectly too, man. I left in April. You know, I saw the market kind of turning, momentum turning. Where was it? Let's go to the chart here, and I'll show you. I'll show you what I saw. I was like, man, we went up, we rocketed up here, right? Oops. We rocketed up here. I'm gonna change this to candles. I use bar charts, but I'll change it to candles to make it a little more vibrant on the screen, right? But I saw this rocket up, and I'm like, once it broke here and started making a kind of like a lower high and just couldn't break above here, I'm like, all right, that's it. Time to go on vacay. And I booked the flights, and I was out for 3 months. Now I'm back. So does that mean the market's gonna turn back up? I don't know. No, I'm just BSing, man. It just happened to happen that way, which worked for me because I didn't really have to watch the markets as much, you know. It's just this sideways chop and setting up my liquidity pools to farm that yield and just let it work. Let the market do the heavy lifting. You know, make sure I'm managing my pools, have my process going well, not taking on too much impermanent loss. Actually, I was in April. I know some of you guys might recall. I was using the Aperture Finance recurring rebalancer, which is the one that rebalances in perpetuity. And I used that because, you know, at the time I was in the middle of traveling. I was actually flying, and then I just could not be at my computer. I just really didn't feel like being at my computer and manage each rebalance. And since it was so volatile and the yields were so high, I decided to use the recurring rebalancer, take on some some impermanent loss, but the yields were insane, right? Like for a few days. But minus the yields, I'm not counting the yields. I'm just counting my principal in the liquidity pool. And after using the recurring rebalancer, if it went back up to my original stake price, my anchor price, I think I incurred about 2 to 3% of impermanent loss. So I try to, I think it was like April or May, early May. I try to play the downside, right? And I was like, you know, maybe I could recoup that 2 to 3% of impermanent loss. If not, if I'm wrong, it would increase my impermanent loss to, I think it was 5%, which it did, right? I was wrong. I think it was like, it could have been here where I was looking to short, or maybe here, somewhere around here, and I got stopped out, right? So I stopped out and rebalanced my liquidity pool back to Ethereum heavy, right? So just kind of explain the context here. I was pretty much at a full bag of Ethereum, and I was at 2% impermanent loss, right? Or 3%, can't remember. And then, so I swapped it to mainly USDC to try and capture the downside and also recoup that impermanent loss, right? So that failed, right? And now I was at this point, I was at a 5.5% of impermanent loss. Now this is not counting the yield I've earned. With the yield, I was like I was already in profit, right? So, but I like to optimize. I like to put it on hard mode when I'm farming liquidity pools. I like to make sure, because if I use yield to pad my impermanent loss and eliminate impermanent loss by using yield, it just shows me that I'm not optimizing my liquidity pools, as best as they could be, right? If I could eliminate impermanent loss just strictly by my liquidity pool management process, then I get to keep more yield, right? More yield in my pocket, more money in my pocket, right? That's the idea. That's the name of the game, right? This trading game is just very hard, and it takes, you need to extract every edge you can get, right, out of and to make sure you're successful at this, right? So that's what I did. And so I was at a 5% impermanent loss, 5.5. And then we had the market rip up. I went back to ETH heavy. Then the ETH ETF got approved. That was the 21st of May. I remember I was in Thailand. And I woke up that morning and I was like, holy shit. All right, this is good. But the only thing that sucks was that I had the impermanent loss of 5.5%. I was like, man, I kind of hope we get a drawdown so I can try to take another stab at recouping this. So I did that, and around 3,800. Oh, sorry, I'm not even on ETH. Let's move over to ETH, Ethereum. Yeah, here is where the ETH ETF got approved, right? So I was like, all right, but I wanted to recoup that impermanent loss. I kind of saw it kind of petering off here after the news went, took all that liquidity. No more buyers, right? So kind of started trending down. And I think it was probably around here, around 3,775, 3,800. I took my liquidity pool and I swapped it again back to a full bag, nearly a full bag of USDC. I went from a range of 3,900 down to, I think it was like 2970 or something, somewhere around there. So that way I can still collect yield if we go down, if we draw down in price. I would generate that yield, but I reduced my exposure to price. So as I'm buying Ethereum on the way down, eventually I will gather enough Ethereum to be able to overcome that impermanent loss by buying enough Ethereum at a lower price, right? So it's kind of like I'm using it to essentially time the market, right? In this sense. And this stuff is like purely optional, but I trade as well. So I saw an opportunity. I'm like, you know what? Let me try this. Let me do this. The risk was low. If we broke out to the upside, I would have just reverted back and swapped back to Ethereum and then try again at a later time, right? So that's what happened. And then we came down, and I think it was here. Yeah, it was during this move here. I recouped all my impermanent loss, right? And at this time, I was at about an 8% impermanent loss because on this move here, I was selling Ethereum on the way up, right? So I didn't have enough Ethereum on the way up, so my impermanent loss became greater, right? Because I didn't expect this move to happen. Nobody did, right? Nobody expected this to go from, what was it, 3,000 to 3,800, like within a day. So I took on an impermanent loss there too, right? So it added to it. So I was at about an 8% impermanent loss. So I took a stab here, USDC heavy, recouped all of it at this candle here, I remember. And I remember it was late at night and I saw it and I'm like, I'll just handle it in the morning. I just like, you know what? If it goes lower, cool. If it goes higher, it's still low enough to where like at least I recoup most of this, right? So I woke up the next day, popped back up, and then I think I waited another day, and then it was on this day. It was around 3,500. We were like close to like 3,500 or maybe 3,520. And what I did was I decided to lock in what I gained back in impermanent loss, which was a total of 6% back. So I was down to 2% in permanent loss. And this whole time I'm generating yields, right? So that's just extra on the top. and I went full Ethereum and I left it long. And I'm like, you know what? If it goes lower, I'm gonna take a different approach, right? I just felt like from here, the risk was greater to the upside if we happen to make a move to the upside, and I would give back that impermanent loss that I gained on the way down, right? So I was like, you know what? Up here was a good risk reward, but down here, I recouped 6% of that, right? Of the impermanent loss. I don't want to give it all back, right? So let me just lock it in, rebalance back to pretty much a full Ethereum bag. And then I set up my ranges, right, to the upside. Well, obviously that didn't happen. We fell down. We drew down. I went ahead and lent out my Ethereum to Aave and then borrowed USDC on top of it to farm liquidity pools. So what I did with the loan was to set up a USDC heavy loan, a single-sided liquidity pool, no Ethereum. I didn't buy any Ethereum. And I set the range around 3470 down to below 3000. So the idea here was like, if price went down, I would generate yields on the way down. If it went up, I would be spot long Ethereum on the way up, right? So either way, I win, right? So obviously it went down. I've been generating yields. I'm averaging about 100 to 110% APRs on a range that was about, at the time, about 30% wide, which was pretty good. I mean, there was a lot of volatility. People are a little fearful right now because, you know, they're like, Germany is selling Mount Gox, right? This whole Mount Gox thing, I can't wait until it passes. Like, this thing has been going on for years. People are just always afraid. And, with markets, like, as long as an event doesn't change your fundamental thesis or just your original trade idea on that asset, like, I don't care how much they sell, right? As long as Bitcoin's code and original like use case, its perceived use case is still intact and nothing has changed with Bitcoin, right? All of this is short-term noise for me, right? And I actually welcome the volatility because as liquidity providers, that's how we generate our yields. These are the best times to be farming liquidity pools. And it's just funny because, I get DMs and people asking me that should they get out, right? Should I get out of the market? This whole Mt. Gox thing, it seems pretty bad. Germany's selling. Should I get out and try to come back later? When should I come back? Maybe next year or later this year? I'm like, dude, you're farming liquidity pools, right? You have to think like, first of all, a liquidity provider benefits most when they're in the market, right? And if you're in the market all the time, you're constantly generating yields. And first of all, it's hard enough to determine where price is going to go. Is it going to go up? Is it going to go down? That's hard enough. But now, say you have to predict also volatility. When is volatility going to explode higher, right? When is it going to be low? That is nearly impossible to predict. You will not know when volatility spikes until it does. And it would be too late. You would be too late because the move will have happened. You will miss most of the move and you'll be caught on your heels, or you'll just be in a deer in headlights if it's a crazy move like this move here in May when the ETF got approved. Who would have been ready to jump in on this, right? Most likely not many people, right? To jump in on a liquidity pool, have their plan set, ready to stake. You had no time to react to this. But you see the volume generated? And I was in that liquidity pool and it blasted out with huge yields, right? And that's the thing, like, if you can position yourself, right, to generate yields, but also managing your risk, right? Using position size, structuring your liquidity pools properly so you're okay with the drawdown, right? If you're not okay with the drawdowns and You're just telling yourself you'll be okay. But when it happens and you're like, holy shit, what am I doing here? Then you lie to yourself, right? You have to be very, like, everything is all like on you, right? It's all a reflection of you, how you determine, how you're going to perform, right? Because if you just lie to yourself and say, you know what, I'll be cool with a 20% drawdown, but then it happens and you're like, holy shit, and you're selling off at the first candle down, you weren't being honest with yourself, right? Maybe you need to size down, or maybe you need to go wider in your liquidity pools. So you buy the asset a little slower, right? On the way down. The wider it is, the slower you buy, right? I know we tend to get hung up on APRs and trying to boost out, like squeeze out that yield. But this is like during this time when volatility is low, like say, down here, during this run right here, volatility was really low. And a mistake a lot of people tend to make is they get very tight on their liquidity pools because they're used to the explosion in volatility. They're like, wow, I was generating, over 200% APRs on Ethereum over here. Now I'm only getting like 50, 60%. So then they go and get tired because they want to squeeze out an extra 50% or maybe 30% in yield, right? But you have to think, like, you got to put in perspective, like, well, that's the APR. That's the annual yield. That's going to take a year to play out, right? Now, is that year of yield going that tight? Is it worth it if volatility explodes and price explodes out of your range? Would it be worth farming that extra 30% in yield? Most likely not, right? So I'd say, like, adjust your liquidity pools based on where you think the market's going to go and where it could go, even if it's against you, and plan for both sides, right? And set up your liquidity pools that way. You're less emotional. Use Aperture Finance as a way to rebalance automatically, so you remove all that emotion. So let's see. Much better, not choppy at all over here. Roughly what percent of impermanent loss is fine to you? I don't predetermine like how much impermanent loss I'll take. I try to eliminate it and even get to like an impermanent gain, right? Impermanent loss, I try to control it within the liquidity pool, just the principle of the liquidity that's staked. And I don't count yield with it, right? But there's opportunities where I could be like, okay, we're kind of at a level where I could rebalance wider. And here, I'll just show some examples here, actually. Give me 1 second here. Let me just I gotta log in. I'll show my current liquidity pool and just kind of talk through it. Some MetaMask stuff. Okay. Let's pull up the Uniswap. Pool. Let's go. All right, here we go. Oh man, that's bright, dude. Let's darken that. Hold on. There's the settings. Here we go. I haven't been at this computer in a while, as you can see. Okay, you can close that. There you go. Okay. So, oh yeah, it rebalanced. Okay. So Aperture just rebalanced my liquidity pool, but what I had was a range of 34.70 down to like 29.70. And when it got down to 29.20, it rebalanced to this range. Now, the value of the liquidity pool, let's bring out a calculator, my trusty tool right here. The value of my liquidity pool when I staked it was 70K, 70,000 USDC. And I set it up from 34.70 down to 29.70. And price was around 3,500. So price wasn't in my range yet. It was full USDC, ready to buy the dip, right? So right now it's worth 67,703 at a price of 3,074. So why don't we bring out the Metrix Finance. And I'll launch this. Here. Let this load up. ETH USDC. I'll just leave it on Ethereum. One rule of thumb that I like to do, I like to use Ethereum, even if I'm like on Base or on Arbitrum or Polygon, right? I like to use Ethereum as to model out my liquidity pools, because the liquidity is like, there's just a lot more liquidity there, and it gives you more accurate, and it kind of like it under promises in a way the yield you'll get. Like usually I earn more yield than what mainnet will tell me I get, right? Because there's so much more liquidity on there. That means there's more like mouths to feed as far as yield. So the yield is lower on mainnet, right? But anyways, it gives me a more accurate and more realistic number to expect. So I went 70K, 70,000 USDC. And it was price was like at 3,500, I want to say. And then I set it up 2970, 3470. It was something like that. Oh shit. Hold on. I gotta log in. God damn it. It like totally like, there you go. Let me log in. Sorry guys. Okay, let's redo this. And Nima, just to answer your question while I do this, the impermanent loss is not something that I pre-plan, but there are times when you want to use impermanent loss to control risk, right? Like say price is trending down, and say you were in a single-sided Ethereum USDC pool, price got about halfway down your liquidity pool, now you're 50-50, and you're like, you know what? I don't want to buy any more Ethereum here. I'm good with the amount of Ethereum I have, or maybe I have a little bit too much, and I think price is going to keep going lower, right? According to your analysis and whatever your strategy is, you're thinking there's more of a chance price could go further down to the downside because it broke support or whatever, right? So in this case, you would use impermanent loss to protect you, right? Say I want to take on 5% of impermanent loss to protect myself if price goes lower. That way I could still be in the market generating yields, right? And the upside is that as price goes down, when you rebalance, you're not incurring as much of a loss as you would in your original pool, right? You're incurring less losses, but in exchange, the risk is the impermanent loss. You're risking 5% of impermanent loss to protect yourself for a potential move downwards, if that makes sense, Nima. Hopefully that makes sense. So you would use impermanent loss in that way to protect your capital, right? Protect your principal. That's a perfect way to do it. And I use it at times as well. Like I'm like, you know what? The risk reward is small here. I think price is going to go down. Let me just lock in some impermanent loss and go for it, right? Try to buy more ETH at a lower price, lower than I expected, right? So, and then the whole time you're just generating yields, right? Time in the market, letting the market work for you, generate those yields, protecting yourself. So impermanent loss is not a bad thing necessarily. It's actually not a bad thing. It's just people don't understand how to use it to protect themselves. People look at it and say, "Oh, impermanent loss. It's terrible. It doesn't. You can't be profitable with providing liquidity." But it's all BS because they don't understand what they're doing. You have to understand how it works how the whole thing works, what the good is and the bad is. Everybody just wants to come, they see the high APRs, they're like, oh yeah, I'm just going to print money like the Fed, right? And it doesn't work that way. So that's how you use impermanent loss. And you use only as much